There was an author who penned a book and got copyrighted for his work. As he was a poor person, he was unable to print and publish the book. There was a publisher who was very wealthy. He had got very good sales network across the country. The author has an exclusive right over the copyrights of his book. That is, other than this author, nobody can publish the book without his consent. Since he is poor and unable to publish the book commercially, now he can consult the publisher and get into an agreement and give this special right over his book to the publisher to print and publish commercially in multiple numbers. Here, the publisher who takes out special right over the book will pay a consideration called royalty to the author.
Hello everyone. In this video, we are going to discuss about royalty accounts. Before we begin, welcome to Sridhar's lab.
Introduction to royalty. Some persons may possess special rights over something. An author has an exclusive right over the copyrights of his work or book. A patentee has an exclusive right over his patent rights. A landlord possesses an exclusive right over the mines or quarry in his land. These persons can themselves use their special rights or give out their special right on lease to others who are interested in taking out these rights for some consideration. Let us take an example of a patentee who has invented something and has obtained a patent right for it, but he may not be wealthy to produce it commercially, or he may not be having proper marketing skills and sales network. Therefore, he can give his special right on lease to another person to produce and sell by taking these rights for some consideration called royalty. Therefore, when the rights are leased, the owner receives a consideration for the same, which is called royalty. Now let us understand who is lessor and who is lessee. The person who gives out special right over something on lease to another person for a consideration is called lessor. The person who takes out the special right from its owner on lease for a consideration is called lessee. Let us take an example of author and the publisher. Here, author holds a special right over his book, and this right is given to the publisher to publish the book. In this context, author is the owner and is regarded as lessor, and the publisher is the one who takes the right from author and publishes the book. Therefore, in this context, publisher is regarded as lessee. Now let us discuss meaning of certain technical terms used in royalty agreements. That is royalty, minimum rent, short workings, recoupment of short working. Let us discuss this meaning in detail. Meaning of royalty. Royalty is a periodical consideration or payment based on output or sale payable by the lessee to the lessor for having utilized the rights of the lessor. That is, royalty is a consideration paid by lessee to the lessor for utilizing the rights of lessor. That is what called as royalty. Royalty is paid periodically based on the agreement between the lessor and lessee. So it all depends on their agreement. Let us take an example of a mining yard. A landlord, that is the owner of the mining yard, and the lessee might have agreed for yearly payment of royalty. Therefore, the royalty here will be paid at the end of every year. Most importantly, royalty payment can be based on either output, that is production, or based on sales, depending on the agreement between the lessor and the lessee. Let us see how the royalty is calculated when the royalty is based on output, that is production. For example, in an agreement between an author of a book and a publisher, the royalty is payable on number of books produced by the lessee in a year. I repeat, the royalty is payable on number of books produced in a year. This is very important. And the royalty is rupees 100 per book produced. That means for every book produced, the author is going to get a royalty of rupees 100 per book. Now see here, in this context, 2017, in the year 2017, 5,000 books are produced. For every book produced, the author will get a royalty of rupees 100. Therefore, in the first year, the author has got 5 lakh rupees as royalty. That is 5,000 into 100 rupees. In the second year, number of books produced are 7,000. The author will get the royalty of rupees 7 lakh. In the last year, that is 2019, number of books produced is 10,000. The author will get a royalty of rupees 10 lakh. That is 10,000 book produced into 100 rupees of royalty for every book. This is how the royalty is calculated when the royalty is based on production. Now let us see how the royalty is calculated when royalty is based on sales. Let us take the same context as above, but here in this second example, the royalty is rupees 100 per book sold. Very important, the royalty is rupees 100 per book sold. So for every book sold by lessee, the author will get 100 rupees as royalty. Now, in the first year, that is 2017, number of books produced is 5,000 books and number of books sold is 4,000. So here the royalty is particularly based on sales, irrespective of books produced. So here the royalty paid to author is based on sales 4,000 into 100, that is 4 lakh. Similarly, in case of 2018, number of books produced is 7,000, number of books sold is 6,000. Therefore, the royalty is 6 lakh rupees on sales. In the year 2019, number of books produced is 10,000, whereas number of books sold is 8,000. Therefore, the royalty is 8,000 into 100, that is 8 lakh. This is how the royalty is calculated based on sales. The royalty has to be calculated on production or on sales is purely dependent on the agreement between the lessor and lessee. In the problem, in the question, if they specify that the royalty is based on production, then you need to calculate royalty on the basis of production, that is output. If they specify the royalty is on sales, then you need to calculate on the basis of sales. Meaning of minimum rent or dead rent. Minimum rent is a minimum amount the lessee must pay to the lessor irrespective of the volume of output or sales in a particular year. In case of royalty, the lessee has to pay a minimum amount as royalty as per the royalty agreement. This is because usually in the first 2 or 3 years of lease, on account of the preparatory work involved, the output produced by the lessee will be low, and due to that, the royalty payable by the lessee to the lessor will also be low. But it is not fair to make the lessor to accept a low amount of royalty simply because the output raised by the lessee is low. Therefore, to make the lessor to get a minimum amount in a year of low output, a royalty agreement is associated with a clause known as minimum rent. Whatever may be the output or sale in any particular year, a minimum amount must be paid by the lessee to the lessor. So, the minimum rent is the guaranteed minimum amount which the lessee is required to pay to the lessor in a particular period, irrespective of volume of output or sales. Let us understand minimum rent
through an example. ABC Coal Limited took a lease of coal mines for a period of 10 years. Minimum rent is 10 lakh, royalty is rupees 100 per ton of coal raised, that is on output. In the first year, that is in the year 2016, output is 5000 tons. Minimum rent is 10 lakh. So minimum rent will be 10 lakh for each year. Royalty is 100 rupees per ton. So therefore royalty amount is 5000 output into 100 rupees per ton, that is 5 lakh. In this situation, if the royalty is less than minimum rent has to be paid to the landlord, that is to the lessor. That is, minimum rent becomes payable only when the royalty is less than minimum rent. In the second year, 2017, output is 8000 tons and then minimum rent will be 10 lakh. Royalty is 8 lakh, that is 8000 into 100 rupees, 8 lakh. In this case also, royalty is less than minimum rent, therefore minimum rent will be payable to the landlord. In the year 2018, output is 10,000 tons, minimum rent will be 10 lakh, royalty is 10,000 into 100 rupees, that is 10 lakh, amount paid to landlord is 10 lakh. In the year 2019, outputs are 12,000 tons, minimum rent will be 10 lakh, royalty will be 12 lakh, amount paid to landlord is 12 lakh. So if the royalty is equal to or more than minimum rent, then there is no question of payment of minimum rent. In such case, the minimum rent will be merged with the actual royalty and only the actual royalty becomes payable. In simple, when the royalty is less than minimum rent has to be paid to the landlord, that is lessor, and when the royalty is equal to or more than minimum rent, then the actual royalty has to be paid to the lessor. Meaning of short workings. The excess of minimum rent over the actual royalty of any particular year is called short workings or deficiency or shortage. When the royalty is less than minimum rent, then the lessee has to pay minimum rent. Here, the difference between minimum rent and actual royalty is called short workings. Short workings is the extra amount paid by the lessee in addition to the actual royalty. Let us understand short working with an example. Let us take same example which we had taken for minimum rent. In the first year 2016, output was 5000 tons, minimum rent was 10 lakh, royalty was 5 lakh. So the difference between minimum rent and royalty is 5 lakh. That is what short working, because we are paid 10 lakh to the landlord, royalty is 5 lakh. Where did the other 5 lakh come from? That is what short working. So the difference between minimum rent and royalty is short working. In the second year 2017, we have got output of 8000 tons, minimum rent is 10 lakh, royalty is 8 lakh. So the difference between minimum rent and royalty is 2 lakh, amount paid to landlord is 10 lakh. So when royalty is less than minimum rent, we have to pay minimum rent. So the difference between minimum rent and royalty is short working. So therefore the amount paid here is 10 lakh. In the year 2018, output is 10,000, minimum rent is 10 lakh, royalty is 10 lakh. Short working is nil because when royalty is equal to minimum rent, actual royalty itself will be paid to the landlord. In the year 2019, output is 12,000 tons, minimum rent is 10 lakh, royalty is 12 lakh, amount paid to landlord is 12 lakh. Short working will be nil. Why? Because when royalty is more than minimum rent, actual royalty is payable to the landlord. Meaning of recoupment of short workings or recovery of short workings. Recoupment of short working refers to recovering the short working of any year from the surplus royalty of the succeeding years. The recoupment may be permitted over a stipulated period of time or over a specified period following the year of short working or within the lifetime of the lease. If there is short working in any year, that means that is the extra amount paid in addition to actual royalty in that year. Since short working is an extra amount paid by the lessee to lessor, that extra amount paid can be recovered from the surplus royalty from the next years. This is what called as recoupment or recovery of short workings. Recoupment can be of three types, that is fixed recoupment, floating recoupment, recoupment within the life of the lease. Now let us understand the meaning of fixed recoupment. When recoupment or recovery is permitted only over a fixed or stipulated period, it is called fixed recoupment or fixed recovery. Let us understand this with an example. If in the agreement it is specified that minimum rent is 10 lakh, royalty is rupees 100 per ton of coal raised, that is on output, and the short working can be recovered in the first 3 years only. This line is very important. If in the agreement it is specified that the short working can be recovered in the first 3 years only, then let's see how it works. Let's take an example with regard to table of analysis. In the first year, that is 2015, the output was 6,000. As mentioned, minimum rent is 10 lakh. Royalty is 100 rupees per ton of coal raised. So output is 6,000, royalty is 100. 6,000 into 100, royalty will be 6 lakh. If you match minimum rent with royalty, royalty is less than minimum rent. Therefore, there is a short working of 4 lakh. So short working, remember, when minimum rent is more than royalty, there will be short working. So there is a short working of 4 lakh. So amount paid to landlord is 10 lakh. In the second year, 2016, output is 8,000 tons, minimum rent 10 lakh, royalty is 8 lakh. There is a short working of 2 lakh because minimum rent is more than the royalty. So there is a short working of 2 lakh, amount paid to landlord is 10 lakh. In the third year, that is 2017, the output is 15,000 tons, minimum rent is 10 lakh, actual royalty is 15 lakh. Short working is nil because royalty is more than minimum rent, there is no short working. But under short working recovered, we have got 5 lakh. How did we get that 5 lakh? That is the thing here. In the example, when we have discussed about a provisions, it is very clearly mentioned that the short workings can be recovered in the first 3 years only. So that means in the previous years, if there is any short workings, that can be recovered in the first 3 years only. In this context, the first 3 years means 2015, 2016 and 2017. So if there is any short workings, that has to be recovered within 2017 only. So in the previous years, there are two short working, one is 4 lakh, the other one is 2 lakh. Total short workings are 6 lakh. But in the year 2017, we have a surplus of only 5 lakh when we compare royalty with minimum rent. So there is a surplus of 5 lakh as against minimum rent in the year 2017. To the extent of 5 lakh, we can recover the short workings in the year 2017. So out of total short working 6 lakh, we have recovered 5 lakh rupees in 2017 and another 1 lakh is irrecoverable. So therefore, amount paid to landlord is 10 lakh. In the next year, 2018, the output is 9,000 units. Minimum rent is 10 lakh, royalty is 9 lakh, that means royalty is less than minimum rent, therefore there is a short working of 1 lakh. Short working recovered is nil and short working irrecoverable is 1 lakh. So now this is very important. In this year there is short working of 1 lakh and that is irrecoverable. Why? Because in this case the short workings can be recovered in the first 3 years only. After that, if at all if there is any short working also, that cannot be recovered at all. So this kind of situation is called as fixed recoupment. That means short working has to be recovered within a fixed time limit. So this is what called as fixed recoupment. In the next year 2019, the output is 12,000 units, minimum rent is 10 lakh, royalty is 12 lakh, and amount paid to landlord is 12 lakh.
Meaning of floating recoupment. When recoupment is permitted over a subsequent period following the year of short working, it is called subsequent recoupment or floating recoupment or floating recovery. To understand this, let us take an example. If in an agreement minimum rent is 10 lakh, royalty is 100 rupees per ton of coal raised, short workings are recoverable in the succeeding 2 years of such short working. This provision is very important. Short workings are recoverable in the succeeding 2 years of such short workings. If this is the case, in the first year, that is 2015, the output is 6,000 tons, minimum rent is 10 lakh, royalty is 6 lakh. Since minimum rent is more than royalty, so there is a short working of rupees 4 lakh. Here, it is clearly mentioned in the provision that short working of any year can be recovered only within 2 years of such short workings. That is, 2015's short working has to be recovered within next 2 years, that is within 2017. If the short working of 2015 is not recovered within 2017, then the short working becomes irrecoverable. Similarly, if there is short working in 2016, it has to be recovered within 2018, so on and so forth. Therefore, whenever there is short working, that has to be recovered within next 2 years of that short workings. In the year 2016, output is 8,000 tons, minimum rent is 10 lakh, royalty is 8 lakh, and there is a short working of 2 lakh. Here, 2015 short working cannot be recovered in 2016 because in 2016 there is no surplus available to recover the short workings. In 2017, output is 15,000 tons, minimum rent is 10 lakh, royalty is 15 lakh. Here, there is 5 lakh surplus available in royalty which can be utilized to recover the short workings of previous years. Out of 5 lakh, 4 lakh rupees short working of 2015 can be recovered now and remaining 1 lakh can be utilized to recover 2016's short working. In 2016, short working was 2 lakh. Out of that, 1 lakh is recovered in 2017 and to recover another 1 lakh, 2018 is the deadline. In 2018, output is 10,000 tons, minimum rent is 10 lakh and royalty is 10 lakh. In this year, there is no surplus available. To recover 2016's remaining short working of 1 lakh, 2018 was the last year. So, short working cannot be recovered as there is no surplus available. Therefore, that 1 lakh becomes irrecoverable. This is what floating recoupment is all about. Recoupment within life of the lease. When recoupment is permitted over the lifetime of the lease, that is, no restrictions of time for recoupment of short working. If this is the provision in the agreement between lessee and lessor, in that case, the short working of any year can be recovered any time in the life of the lease. So there is no time restrictions to recover the short workings. That is what recoupment within life of the lease. Thank you for joining us.